The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy.
On this episode of Pennies Going In Raw, we talk SEC filings with VerdeTrades, and we also talk this week in the market and discuss Tesla's new robot.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, fuck, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us. Pennies.
Going in raw.
Featuring Dan, Deity of Dips, and Hugh Honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going In Raw. Today is Sunday, August the 22nd, and dude, I think this was my first good week of August where, you know, every week this month I've been like, damn, this does kind of suck. But I had some good swings pop off this week, and DATS, D-A-T-S, the IPO of Dat Chat that Zach had mentioned around 380, and he was always saying don't chase over 4. I think it hit above 6 on Friday after hours. I saw a good bit in the 550s, but another banger right there. And then also GMVD, I know a lot of people were swinging that. You know, that ended up running up again after hitting around 220, 210 on, I think, Wednesday or Tuesday, and hit above 350 pre-market Friday, and then back above 3 in the after hour. So it seemed like some of these swings did get, just beaten down too hard and then have good bounce backs, or IPO start running. It just seemed like finally a decent week in the books. How was yours?
Mine was okay. So it's funny. What was it? I think last Sunday we talked about how like these RSIs are getting incredibly low. And then, to see this week of like pretty good bounce backs was nice. Like even like the China stocks like Baidu, Tiger, some of those China stocks have just gotten killed inside the recent months. I mean, they were up like 7-8% at one point on Friday. So yeah, I mean, it's really good to see. I was pretty much chilling this week. Like for me, it was, I'm pretty much getting ready I'm starting to unwind for Egypt and stuff. So I'm just trying to make a few bucks. I'm really hoping though that, this isn't like more of a dead cat bounce. And I'm hoping that this is start to, a really good small cap run. I still wouldn't mind like a little bit of a drawback or, a little bit of a drawdown, but personally that's pretty biased because I'm going away. So, I'd rather the market be cold so that when we come back, the market's really hot. But, I'm really hoping that this was a really good week all around, it looked like.
Yeah, it just finally seemed like it had, you could trade around your positions. I was comfortable adding dips and, just because I was mostly cash prior to this week, and then I was seeing people like, damn, this swings, and I was finally, during the middle of the week, had the opportunity to enter these in such a comfortable position, and then they had such a hard reverse, man. It was just finally nice to win one this month,
Dude, for sure. I mean, even this week, like I said, I really wasn't trading too much, but it was like it was way more green than the previous 2 weeks. So, I mean, that was nice for me, to not really put in too much effort and still end on like a pretty green note.
Yeah. Aside from Monday, yeah, finally a good one. But it just seems like kind of like a reset. One of those things, I feel like we've talked about it a while back, like, oh, your swings finally go off. now what do we do? It's like, now we got to re-enter the positions. And it's like, I'm still at the point where I'm taking profits pretty quick because, hey, man, I mean, it's August, you know, and I don't want to lose them. I got to take what I can get.
I also think it's funny that SPY, we always talk about that 50-day moving average, how SPY's literally been bouncing off that for the last like 16 months. I mean, this week, it seemed like we had the first little bit of red in a while. And I mean, what a bounce back at the end of the week for SPY. I mean, it went from down 1%, down 2% to like up 2%. Like, that's crazy range. And the even more crazy thing is that it's not even reaching the 50-day moving average anymore before it bounces back. Like, this didn't, like, at least before it was hitting the 50-day, bouncing back. Like, now it came within a percentage of the 50-day and immediately the dip was bought.
Yeah, no, I mean, that's kind of what I was mentioning on Wednesday when I was talking about like the whole Afghanistan situation, because I feel like, you know, that all the dips started really happening on Monday, Tuesday, when, you know, Biden was speaking about it, et cetera, et cetera. But, you know, as it seems in the market the past year and a half, every like minor news tip just gets eaten up.
It's crazy, but it also kind of worries me because now if this continues to where, but at least when it was touching the 50-day, we could say, okay, the technicals were at least slowing down, you know, so it would be like a little bit of a break and then a continuous. Now, if we didn't even touch the 50-day, that kind of worries me because we can quickly become overextended. And, you know, I mean, anything that becomes overextended eventually, as if we're not already overextended, you know, if we really don't even start to come down to the 50-day, then that's where I really start to get worried, because then it's like, you know, if we go 7, 8, 9% from the away from the technicals, then now that gives a easier drawdown. And again, it's not the initial, you know, drawdown, it's the after effects of people liquidating their position. So if we get into a situation where, you know, tension inside the Middle East increases and, you know, from a technical standpoint, SPY really starts to overextend, you know, that could become one thing where, you know, SPY gets down 3, 4, 5%. And then everybody says, okay, you know, or not everybody, but, you know, if enough people say, hey, I've had such a great 16 months inside my 401k, I'm going to move out into more value, into, you know, less risky stuff, then that's where we see the aftershock of, you know, money moving out. And that's where, you know, you see like, that's where you can see like a flush through the 50-day, you know, maybe to the 200-day, which would be, you know, I mean, that would be quite a pullback.
Yeah, no, I mean, hopefully we don't get too overextended, but at the same time, it just seems like, you know, we've been due for a pullback for a while, but, you know, the market does what the market does. So, and then before we get into our SEC talk with Verde, Tesla came out with a robot, 5'8", 125, built just like me. What do you think about that? What do you think about, like, is this a Tesla? So this is another Tesla thing. It's not like SpaceX where it's a different thing. This is Tesla.
Yeah. This is kind of where we talk about, you know, when I think like the companies that are, you know, too big to fail, I think Amazon, I think Apple, and I think Tesla. And that's because, one, the brand loyalty, and I mean, like, Apple has more cash than most third world countries.
Apple's
like,
been dropping the same phone since Steve Jobs died, and they keep selling those out every time. I mean, until that changes, why not just keep doing that?
Exactly. But this is where I think, like, you know, where like the executives and, you know, the upper management can say to themselves, like, hey, if Tesla's doing that, like, we have more than enough money to go pay some geniuses to create their, you know, an own Apple robot. And then that's where I really think that these three, you know, companies really pull away, because they can innovate into, you know, space robots, you know, things that people that, like, you know, any other company that specializes inside that field can't even compete with. But you know what I was laughing at was, was the Tesla bot 5'8", 125, because I looked it up, and that's like I guess like 125 to 145 for someone 5'8" is like the recommended weight or something. And then I looked up like what I'm close to there, and I looked up like what the average 5'8" person is, and it's like inside America they're like 160. So So I found that really funny. But from a personal standpoint, I don't like the idea of robots like becoming accessible. Like I don't like that to the civilians. Like I don't like that idea. Just because I've seen, there's so many movies out there of like robots turning against like humans and stuff.
Yeah, you saw like he made it so if you can run faster than 5 miles an hour, you can outrun it. So I'll at least be on the same pace as it.
Dude, I don't know. I haven't ran in a while. But yeah, so I think it'll be really interesting. I think it's I think the way that Elon Musk does everything is super smart, as far as like his marketing plan and like the fact that like there was rumors about robots, but I mean, the way that he really keeps things, really internal, and then he makes a big grandioso scene about it is like genius to me. Like, I think that's like Tesla will probably be up like 5% on Monday, like for what? Because he showed a prototype of like a robot potentially. I just think it's so cool the way that he does everything. I mean, it's almost like he like trapped shorts, like if he had done this robot reveal 5 months ago when Tesla was at like 700, 800, like it probably would have been like a sell the news. But it's almost like he waited for a pullback inside Tesla to like start releasing news, and start releasing like updates. And now it's like one of those things. Dude, like I honestly like I saw something like a conspiracy theory on that from like one of the bigger FinTwit guys, and it was like every time that the chart got pulled back to like a support level, he released like, oh, like we think we're gonna be like this quarter is gonna be like our biggest quarter ever, like, or like some tweet like that, and it would just start like a 3-month run for the stock like over the last like 6 years. And I was like, holy shit, like what if Elon, I don't know, I like thinking about stuff like that.
Yeah, most CEOs, if they tweet that, you just think it's bullshit. But I mean, this guy can also control the price of just about every single cryptocurrency. So he is the all-powerful Elon. So, all right, guys. Well, that's it for the intro. And now we have SEC filings with VerdeTrades. Enjoy. Today we have on VerdeTrades. Thanks for coming on. How are you, man?
I'm good. Thanks for having me. I appreciate it.
So we always kind of start these off with how you began your trading journey as a whole. Like, when did you start? Who kind of guided you at the beginning, and what were you doing at the time anyways?
So when I started law school in 2014, all my friends that I had graduated with, they got jobs and started, making a living for themselves. And having still been in school, just try to figure out, since it's difficult to hold down like a full-time job. So rather than, turn time into money, figure out a way to turn money into money. And honestly, just spent hundreds upon thousands of hours between, all the videos that you could possibly imagine, especially from back in 2014 when there were players in the space that you haven't even heard of anymore because they either blew up or got arrested or who knows what. So I learned from a whole host of interesting characters, some good, some not so good.
So, now you're kind of known as the like news guy. You always have the filings before everyone as they come out. How how did that come about? And does like your background in law, like, is that everything to do with it, or where does it come from?
I don't know that my background has anything to do with it, other than just like, I guess, somewhat quick ability to analyze a lot of information. but it really is not as much information as people, think. Just because some quarterly report is, 96 pages. I mean, I've practiced and trained, so to say, and studied enough to, find what I need to look for in a matter of, I don't know, 10, 20 seconds. And you can, condense that information, typing out in, a sentence to share it with, the group.
So there's no secret, bot that you have that's 10 seconds faster than anyone else that, before it hits the filings, before it hits Edgar, it comes to Verde first. Like there's no little retract or retrace system. It's just, you're good.
Despite the rumors, no, that unfortunately is not the case. Just, RSS readers or whatever to pull the filings. And then I just, got my reps in and learning what to read for, what matters, especially in, small cap land, what headlines, like, if we're using earnings as an example, what is usually reactive toward, a small cap stock moving up, 10%, 50%, 100% on some, earnings, whether they're good, bad, or otherwise.
So is that like your main trading style, is being able to control F or like do the search function, find out what you need to know, and then buy that like as everyone else gets on it too, but just a little bit quicker? You are the fastest news trader.
It's definitely that's an edge that I have for sure, the speed. But I have to say, with the onslaught of retail that came into the trading world in the last 18 months or so, I'm not even as that early anymore. I mean, I'm still there. I see the filings. But as soon as I'm reading them, I'm already seeing posts on Twitter, or there's already getting a bunch of hits on the tape and a bunch of swipes. People are already hitting it. Where I vividly remember a year and a half ago, 2 years ago, I almost had time to sit there and read a couple pages of it before anything was hitting the tape, and actually be sure, okay, this does read well, let's go ahead and play it. But so I would probably say that you said that's my main style. I would maybe say it used to be. It's still definitely a style I have, an edge that I have, is that that speed and ability to pull the information that I need quickly. But it's probably less of a main style than it used to be now, because information is being shared a lot quicker. There's a lot more eyes getting the same information now, and we've seen the influx of volume into retail trading in the last year and a half, and it's insane.
So you use the term read a lot. Is it really reading, or is it skimming, or do you just like use the search function, and like if it's a earnings report, you look for million or a dollar sign, and if it's an 8K, you look for something else? Are there certain things you look for, and do you read certain kinds different ways? Could you kind of go about that a little bit?
Yeah, definitely. So your main filings you're looking out for are probably your Form 4s. Those are insider buys or sells, but it's not that simple. Then there's what way were the shares acquired or sold? Were they open market buys by the CEO, and were they a lot of them, like 3 million shares, or were they just stock grants where the CEO or whoever didn't spend any money to get them? It was just part of some stock compensation package. That's a key difference, because if it's just a stock grant, even though it might show some large number, that's going to have very little effect, if at all, on the stock. If the CEO spent millions of dollars of his own money, and bought the stock in the open market, then that, there's obviously something there. Same thing on the sell side with Form 4s. And then, I guess talking about 8Ks real quick, all an 8K is just an unscheduled release of news. There's really nothing to say like what you look for, because an 8K could literally be an employee, a director, an executive, left the company or joined the company, which is pretty immaterial unless that person is like Jeff Bezos or Elon Musk. But that 8K could also say we're getting acquired for a 300% premium, and if the filing came out before the press release, then speed to that filing is obviously the benefit there. And then what more so we've been talking about with 10Qs or 10Ks. So 10Qs are quarterly earnings, 10Ks are annual earnings reports. And what I've noticed in my time of trading, especially in small and mid-cap names, is they really just look for three kind of main metrics to see how a stock is going to react to those earnings. And it's for the quarter or for the year, it's revenues, and then you compare, either versus estimates or year over year or quarter over quarter, and then net income or net loss, again, compared to the prior quarter or compared to estimates, and then earnings per share.
All right. Well, I know another thing you mentioned earlier, you were talking about like percents that certain news would move a stock. How do you kind of adjust that for a slow market and then also for when it's an extremely bullish market and there's tons of volume?
That's a pretty good question. And I guess just to reach out something when you were saying, are you reading or you control F and then finding stuff? So all the three main bits of information that I'm talking about are all always in the consolidated financial statements. And that's literally one page on the entire earnings report. So if you find that page, that shows you your quarterly and your annual revenues and your net income or loss and your earnings per share. And it even shows you neatly compared to the prior quarter or the prior year. Now, if we're talking about trading that depending on your, I guess, kind of overall market sentiment, that's a tough one. I would say when things are slower and some small cap name, I guess beats estimates or, has sales or income up maybe only 10 or 20% year over year, that's definitely not very significant versus a 300 or 400, 500% increase year over year. And I would say when things are slow, even some blowout earnings are going to have a hard time catching, and even if it does catch, at least have a really hard time sustaining. Pretty good example of that was last week. What was it? GLG, the stock. What was it? Sales were up like 50. Sales were 59 million for the quarter or for the year, up from 1.5 million. So that's like a 20. What is that? It's like a 20 something times increase in sales, and it did move up, but I'm pretty sure it gave that entire move back. And that's, we're in August right now. It's a little bit slower momentum for small cap names to go and to catch. And then once that happens, you can just overall tell when the sentiment's there. There's the retail crowd is more hesitant to join trends like that.
I was just going to say, do you pretty much keep on things like that? Do you pretty much keep like a pretty tight stop loss, or like I've seen sometimes where you will get pretty big into a position. Is that just because like are you scaling into something, or is it like, hey, if this doesn't work, I'm just out?
Yeah, I guess that depends. If come across that circumstance where I catch the annual report or the earnings report before, it actually comes out in a press release, and I know that I'm early on it and there's like nothing on the tape yet and it's blowout numbers, obviously I have a bit more, comfortability in taking decent size, so long as it's liquid enough to even take it. Sometimes these things, they'll skip up 20% on like not even 20,000 shares. And then you're just sitting there. I mean, you can't even take any meaningful size. So if either that happens, or I kind of want to wait to see how the name, reacts to the news or the earnings, whatever it is, it winds up as long as it got enough volume to actually make a decent move up, come back down, but not just completely round trip. It becomes less about the news at that point and more about the volume. I mean, we all saw earlier this week, what was that, VRPX that went from, I think, like $4 to like it almost touched $40 the next day. That was from the FDA, green lighting a clinical trial. That's nothing. So it really does not matter about what the news is. It's volume trumps all, and I think that's something I guess I've probably always known, but have really seen it put into practice and think about it more consciously this year than probably ever in my trading career before.
Yeah, no, sorry, I didn't mean to cut you off. I was just going to say, so it's really not like systematic trading anymore. Because one of the things we talk about a lot is probably people newer inside the game should use systematic trading and then move along to more hunch trading. And I was saying that within the last year, I've really gotten to more hunch trading. So is it really more like now it's not like, hey, 5% is my stop loss. You're just, you're really just more feeling it out and feeling the trade.
Yeah, I don't have any hard and fast rules and I get probably this is one of the most common questions I get asked in, DMs or whatever is, what percent do you start taking profit? What percent do you have a stop loss? What percent this, what percent that? What percent of your account do you go in with on trade? It gets to the point where, that's not.
You can remove the percents from your broker and it wouldn't matter.
Yeah. And though that's not a metric that's going to, convert into this trade is working really well or this trade is not working well. You could look at the chart, look at the volume, look at the support and resistance and, a couple other things to know this idea is working and my average is way down here and I'm scaling out every little bit, on the way up, or this idea failed. And, if I'm a little heavy on it, it's not just, bail out entirely because depending on the liquidity of the name, you might not be able to. So you just scale out a little bit if it doesn't work, over, a few sells or a few hours or a few days. I mean, everything obviously depends on you as the trader, the liquidity of the name that you're playing and the size that you're playing. But yeah, there's, I don't think there ever should be, you trading with some arbitrary number in your head of, okay, when we hit 10%, I'm scaling, I'm taking half of the shares off the table. Well, that's great. But if, if the trade is really working and you're going to kick yourself when 10% becomes 80% and then some, easier said than done, but it's more so, and that's probably something I've also very much learned better throughout, since COVID and whatnot, is really letting your winners win. I kind of got tired of, scalping something for anywhere from 20 to 40 cents. And that thing goes, $2 to $4 after. And that would happen over and over and over again until I finally, allowed myself to play a bit of a bigger picture trade.
How'd you initially kind of do that? I know obviously the amount of times you watch it, you're in, let's say G and US from 20 to 30 cents. And you're like, nice, a good 50%. And then it goes to $9 or whatever. Enough watching those will make you eventually, stay in them a little longer. But was there a certain time you remember where you just nutted up and just said, hey, I'm a stick in this one? And like, how long did you stay in? And was it like a gradual process of, okay, I'll stay in for 50%, 75, 100, and then eventually you just were able to fill it out?
I can give you a couple of good examples of some bad ones where I remember last summer I took like a lot of sundial, SNDL, like a pretty decent chunk of it, for me at least. I'm pretty sure it was at like 17 cents. And, everyone and their mother during the Wall Street Bets rally was buying that thing at $2, $3, and $4. So the fact that I had as much as I had at like 16 or 17 cents, and I'm pretty sure I sold it for a 50% gain. So
nothing went to like $18. Like, way
no, I think it went to like 5, but still.
Oh, I'm thinking of a different weed
TL,
stock.
yeah, TLRY or whatever.
Yeah, I'm thinking it's so right.
Yeah.
So sundial, was under 20 cents and it went to like 4, almost $5. I mean, over some time, but even still, to not sit there and appreciate that move. I guess that helped teach me a couple things. One, to be a bit more patient when those trades are working, but also to get better at recycling shares. And that's where, I'm okay. I won, I victory on the trade, 50% win, woohoo. But then it doesn't look like it's over yet. You still look at the chart. There's still a ton of volume coming in. It's still respecting certain key levels, whether on the support side, the resistance side, whatever that may be. And then it still gives you, the opportunity to get back in, play it again as if it's a, whole new trade, or play with only the profit you made. So that way you're risking, house money, or, for that, there's different philosophies on retrading something that you already traded successfully. But, that's one thing that I learned how to do better because of having to watch so many, sell for 20%, the thing goes 200%. And,
it's like watching your ex-girlfriend get like super hot and then go to like an Ivy League school.
Yes, yep. Couldn't have said it better myself.
Okay, so for the newer guys, and everyone kind of looks at you as this news algorithm. How do you kind of differentiate? And you obviously is different, but for the newer guys, how should they kind of differentiate news from noise?
I would have to say, honestly, just like time under tape, and that's, minutes behind the screen. Everyone has a different saying they have for that, but you get to a point where you see the same or similar headlines for different names over and over and over and over and over again, and I mean, you just kind of wind up becoming vaguely familiar. The same way that, how do you know what stocks are going to, or at least have a propensity to run the best, and what won't? It's the same thing. By seeing and knowing what, kind of names have the ability to move a lot or a little, whether the volume is insane or not insane. I mean, how many times have you seen people try to push, NAKD and INPX and, just some of these names that no matter what the news might be, they're just not going to go anywhere 99 times out of 100. And so the same way that you get familiar with a ticker's personality, you can kind of get familiar with how names usually react to news. And then, I would still, and we're talking about this for newer traders, I would be hesitant unless you know what that headline says and what it means. I'd be hesitant to jump on it because it might, I mean, we've seen dozens, if not hundreds of times, some biotech name get a headline out that has a couple interesting buzzwords in the headline that, you know, achieved this or that, and pop up a quick 10, 30, 40, 50 cents, and then slam and get smashed, you know, 30, 40%. So for newer people, I would probably look at names that have, you know, the big movers of the day, and whether it was just a no news technical breakout and volume took over, or whether it moved because news. And then you start, you know, yourself training yourself, studying. Okay, so this news took that name up there, and then kind of get somewhat familiar with what that news was. I mean, it's kind of hard to like make an actual list. It's just becoming familiar. The same way that stocks have a personality. You know, there's a typical, more often than not, way that stocks respond to the same or similar type of news.
All right, well, let's say you are holding a swing. You've been holding it a couple weeks. What are the two things? One that would make you, oh shit, I'm excited, let me open this right now, and B, oh shit, oh no, I hope this isn't that bad. Which two headlines do you see that are make you, oh shit, yay, and oh shit, oh no?
Well, I guess the oh shit, oh no is obviously, you know, offerings or a shelf that, you know, if just because there's a shelf doesn't mean offering and dilution is right there starting immediately. But if that name has already made a decent move up, and then all of a sudden they file a shelf, that'll usually do a pretty good job at scaring some holders into selling and attracting short sellers into starting to, you know, short that name, especially if it moved up pretty well into that filing. So that would be an oh shit scenario, where I would not be happy having been long. A good scenario is probably, and I guess this is a filing that we missed, but, you know, 13Ds or 13Gs. That's, you know, more than just some nominal 4 or 5% stake. But, you know, just to kind of sum that part, the long and short of it, with a 13G or a 13D, all it means is a passive or an active stake in a company. I'm pretty sure the threshold for having to file them is 5% of the total outstanding shares. And people, institutions, companies file them all the time. Just because, you know, your name got one doesn't mean it's great. And also they file amended ones all the time, and they cut position sizes and all that. So it's, you know, you got to make sure you look at it and look at the bigger picture.
Yeah, we actually have a. Oh, sorry.
No, you're good.
Okay. We actually had some questions on S3. Someone wanted to know how long can they stay on file and open, and then also what kind of impacts do they have short term versus long term typically?
So I'm pretty sure an S3 can only remain effective for 3 years, I believe, and then after that they have to be refiled if they haven't tapped into. What was the second question?
It was what kind of effects can they have in the long and short term?
In the long term, that's tough, but it's worth. So I guess here's a really good example of just yesterday. You had SONN that was up for, you know, no reason. And if you had the foresight while it was up, you know, a ton, to look at what kind of outstanding shelves were out there, you would see that there was one in effect from just August, I think. Sorry, I'm actually looking at it right now. But anyway, you would see that there was one, because I remember I looked at this literally yesterday while it was trading at like $1.50. And you could see that they had a shelf ready to go. And it's pretty obvious that, shitty biotech names do this all the time. Whether there's a reason or no reason, especially if there's no reason, for, some name to move 100, 150, 200% on just volume alone, chat room, whatever you want to blame it on, without news, they're going to take advantage of that and sell paper, 99 times out of 100. So I saw that, yesterday, that they had that ability to do that because you could just go and look at what open shelves they have on the name. And, so I guess in the short term, that's the effect. Is if you happen to be in that from the dead bottom, good for you. You just woke up to a non-catalyst bump of like 150% of the stock that you're holding. But that's the time where you got to look up and see, can they dilute at any given moment? And if the answer is yes, you better be a seller into that, because otherwise, your W could turn into an L pretty quick, or at least, your profit can get chopped in half and then some. So it's just a good example of a situation to not be overly greedy in.
Gotcha. Yeah, that definitely makes sense. Now, moving on to a little bit about the Verde. Why don't you trade full time? Or wait, did we talk? Are we allowed to talk about that?
I still have questions about filings and stuff. Yeah, we still have a few. What for like fluff news? I know like that word kind of gets thrown around a lot with people saying, oh, that's not a big PR, it's just fluff news, or how it seems like all those Bitcoin companies would randomly start tweeting all different types of crypto stuff or NFTs, and it just seems like companies all just hopping on random shit all the time just to get more investors in. What do you have any like thoughts on that, or what kind of advice can you give on just fluff news as a whole?
Yeah, I mean, I guess it's probably something you'll get used to again, just seeing it, because it's one of those things, you know it when you see it. And that's something as simple as, company ABC hires former Amazon executive to its strategic, alliance of advisors, and like use a bunch of buzzwords to look at us. We just got an Amazon guy to join our team, and is that really going to push the stock price? They might, but I don't know. It's probably a decent example of something that I would call fluff news. And then to your point about companies that just kind of join the overall trend, and put out press release after press release that's just like what's hot for the day or for the month or the quarter. I think we all have seen and traded WKUI many a time, and it's when NFTs were hot, it was all about press release after press release of NFT stuff. And when semiconductor plays were hot, then all of a sudden they were putting out semiconductor stuff. Then you have I guess I would argue that DPW is kind of like that as well. I think they have a crypto angle, and then also apparently an electric vehicle charging angle. And I think even something to do with drones. It's just, it becomes so hard to trust any of these names.
And then all the tweets that a CEO or the social media intern will post, like Remark Holdings, Mark would post one every day. You could always prepare for like the 10% Mark tweet pump.
Yep. And it's funny because that actually, when that was happening almost daily, this is back when Mark was trading at like 25 or 35 cents. Yeah. And I remember every single time I kept I would have my tweet deck up. So I was nice and early, and I'd get a, nice position size because it was pretty liquid and get a nice big push. And I think, the first few times, okay, scalp would be done, make a, few grand, whatever it was. And then eventually I was like, okay, like they're just endlessly tweeting and they haven't had a press release in weeks or months or whatever. Something's got to be coming soon. And so I think even the next couple of times I got greedy and just like buy it or, be there early, and then it would pop. And then it was like, all right.
Yeah, I'd start buying before the tweet.
Yeah, exactly. And then, and then all of a sudden nothing would come out and I would lose my patience and sell the position. And then it wasn't, of course, until after that the thing ran, 10x off.
Yeah.
Finally, press releasing all these nonsense, contracts.
That was a good one for learning how to scalp, though.
Oh yeah, that was a good one for knowing that you need to follow all the names that you trade on Twitter.
Yeah.
Dude, I wouldn't cycle any shares, and then finally I just got sick of like holding it down because it would go 36, 52, 44, and I'd be like,
nah, I remember it very clear. Every single day it'd go from 34, 36 to 40 on the tweet, back down to 36, 40, and then one day it left the 40s, never came back.
That's what I mean. So on that day that left the 40s, I sold half at 55, and like the next day, like it gapped up or something, sold the rest, and like
then $1.20, then $1.50.
And I was like, oh my, like I literally was holding for gold. Like I was like, dude, like the day that they do a press release, blah blah, and then I was, oh man, I played that one so wrong. Played that one so wrong.
Those are always a bitch. But I mean, those are exactly what we were talking about earlier with, selling for the smaller move and not waiting for the bigger one. So, I mean, I guess is another example. Another filing question. This is the last fan question we have. What is I know you, and you also kind of mentioned these earlier, is what is important about 13F? The news is new, but the positions were traded a while back, right? That was the question.
So 13Fs are reports are quarterly reports of institutional holdings. I'm guessing this person is means to ask about 13Gs or 13Ds, but again, those are just active and passive stakes and can be filed whenever. And I mean, if a person, a company, a fund, a firm takes at least, again, I believe the threshold is 5% of the outstanding shares of a company, then they have to file what's known as a 13D or 13G within the coming days. 13Fs, which, the institutional holdings like hedge funds and other stuff, that's a bit different, and those are filed, I believe, every quarter. So back to the 13Gs or Ds, I guess the important thing, and what a lot of people confuse, is they'll see a 13G/A, which all that A stands for is that it's amended. So what that means is the person or company who filed it, that's not the first time you're disclosing a stake in this company. So what you should be doing is scrolling and finding the latest one before the new one from that filer and see if the latest one that was filed, is that an increase? Is it a decrease? Is it a substantial increase? Is it a substantial decrease? Sometimes I've seen amendments filed for, a difference of 100 shares, and you're talking about maybe a 10 billion share position. So it could be completely insignificant. And then I've also seen, big decreases from, 40% of a stake in the company down to 20%, but then people see, a 20% stake and start buying it up, but they don't know that filer just cut their stake in half. So you gotta, know what and why you're buying it before you just kind of blindly or just see some decent percent number that you think looks good or bullish and get long behind it when there's a little bit more there.
All right, and that kind of clears up the SEC filing questions and all of those. So I think what Hugh was getting at earlier was you still kind of have a job. I know it's pretty lax, but why don't you trade full time? I think what he's gonna get at.
So I actually haven't quite announced it yet, but this week was actually my first technically my first fully self-employed week. As of last week, I actually parted ways with the company I was with. As only a few know, I was the general counsel of a small company for the past few years. And, things went well there. I was a very early employee with a startup company. And I guess the reason why I had kind of stuck with it for so long was that it gave me the freedom to do, to do this, to advance and develop this skill that I've been working at since, I started law school in 2014. But, it gave me the freedom to do both.
Well, congratulations on becoming retired.
Thank you. I appreciate that. So, yeah, so the company, they're kind of relocating physically. And it was just kind of time.
You wanted to stay in the beautiful beaches of Miami?
Something like that. I literally go out on my balcony and can see the beach, so I don't really want to leave that.
Yeah, that's understandable. Well, that's all I have. Hugh?
No, dude, that's awesome, man. Have you noticed anything, that last question, have you noticed anything from a mentality side of now that you don't have that paycheck coming in, of like, shit, like today I lost $5,000, like, like you know what I mean? Like when you always have like that consistent, even if it was like, $1,000 a day or whatever, have you noticed that your mentality has changed a little bit or not at all?
I've actually felt quite a bit more free, to be honest, just in these last few days, where it's just, even though it didn't take up, a ton of my time and a ton of my mental capital, I think our mental capital is actually probably one of our best assets as traders. And, the harder you have to work to scrape, 12 cents or $1, whatever it is out of a stock, there's times where it's so easy in January and February, where I think by like the second week of February, I had already hit my, 2020 was my best year ever until I reached February of 2021. And so like there comes these insane, call it a black swan event where it's effortless for people who moderately know what they're doing, like us. And, I'd be at the end of a day ready to, go take the bar exam again because it just wasn't mentally taxing. That was a horrible analogy. No, yeah, it's awful. But my point is there's times that things are slower and opportunity is more slim, and you have to work harder to find what's going to make you that, a few $100, a few $1,000 or $30,000 for the day, whatever your goal is, whatever you're trying to squeeze out of a name. So to that point, if there's anything else, kind of getting in the way of, or spending your mental capital, that's only going to hurt your growth, and your ability to trade successfully. So I would say that that's probably the first thing I noticed, just not having, something extra on my mind.
Yeah, and also your football team sucks ass for a long time, so it probably makes you better. I'm still really salty about the 2013 national championship, so I'm sorry. I didn't mean to lash out at you like that, man.
It's okay. I'm just really glad you were there, right?
Yeah.
Yeah, so I'm glad we were both there together. Even though we
got to experience that. Yeah, that was fun.
And I will tell you, and maybe the next time we do this, and maybe my camera will be on, and I'll show you my office. I have a panorama of.
All right, guys. Well, thanks for tuning in to another episode of Pennies, Gun, and Raw. We're really, really happy that Verde joined us. He's really cool and not a douchebag. So make sure to give us a 5-star rating, unfollow Verde on Twitter, and be nice to us on Twitter. Thank you, guys. And thanks again, Verde.
Thanks for having me, guys. I appreciate it.